Hello there, Slope of Hope people. First, let me step away from my microphone and make a public service announcement. I don't want this to be too loud. Hang on. Click some ads. Thank you. Throw me a nickel or two. Anyway, so a good day today. Interesting yesterday because I was, last week we had broken beneath this line, and we're working our way down some, and then we started to kind of recover, and the whole buy the dip thing was still persisting. And so I was watching with great interest Sunday after the Globex opened, and went down a little, just really nothing much of anything. I woke up this morning, I was anticipating a very busy day on other matters, and I was very interested to see kabloom happen like that. Wasn't sure what on earth had happened. My first assumption was that a major company had done a surprise earnings announcement because we're in that season now. Shut up, dog. Hang on, let me close this door. Excuse me. Yes, you're getting all the bloopers. Okay, thank you so much for not going anywhere. Okay, I'm going to kill him next. So anyway, it was the S&P, as you know, I hope, unless you've been hiding in a cave. And this is to me the prequel of a prequel of a prequel of the get out the Coke and popcorn events that are going to be forthcoming in the next couple of years. I mean, it's going to be really, really interesting and quite a relief from the charade and the nonsense that's been going on over the past couple of years. I mean, you know me well enough to know that I consider everything positive that's been spent over the past couple of years to be an utter fraud. I think everything about this rally since March of 2009, everything that Obama's been saying and Geithner and Bernanke and all the rest is a big load of crap. And when the fall happens, it's going to be really interesting for us here on Slope because God knows we deserve some fireworks. And the Bernanke press conference, that should be a giggle or two, shouldn't it? Boy, I hope they ask him some good questions. I don't know who's invited the press conference, if they pre-screen the questions or whatever. Hope not. If it were my choice, I'd just have every writer for Zero Hedge crammed into a room and not let them out until they're satisfied. Now, looking at the indexes and some ETFs here. The big concern for me and the big hope for the bulls out there has been this kind of inverted head and shoulders forming on the S&P. Here we have a pretty close thing to a neckline, I suppose. We've got a left shoulder here and the head and the beginnings of a right shoulder. And, the bulls are so frothy these days with everything going their way that they've already calculated how high this is going to go. It's like, well, there's 1250 and there's 1340, so that's 90, so we'll get up to 1430. Yeah. And I suppose it could happen. And until such time as this line here is busted, it's a risk. And believe me, that risk was very much on my mind when I went to bed last night, because piercing above this level, around 1340, would be bad for the good folks like me. So until such time as we bust through that, it's still a risk. It is getting somewhat malformed at this point, this pattern, and a pattern doesn't mean a whole heck of a lot until it's complete. But I certainly recognize the risk of that, and it bears attention. I will also point out at the same time that, going back to this little friend of ours, this head and shoulders pattern, as we can plainly see, a failed pattern usually stabs the people in the eye that are hoping it'll do what they think it's going to do. This had all the makings and all the markings of a market that was going to tumble hard, and ouch, boy, did this really hurt me during this run-up. I mean, this just killed the bears, machete through the throat, nasty stuff. Now, this teeny little pattern right here is what the bulls are watching right now. And as I say, until we break beneath here, the bears should continue to wring their hands. Absolutely. Now, looking at precious metals, which is the one true bull market that's been around for years at this point, from time to time, short these items, sometimes with success, sometimes not. For some weird reason, GDX seems to be my best buddy when it comes to precious metals. Silver usually is the equivalent of grabbing a hot cast iron skillet and hanging on to it for a while. Gold, not nearly so bad, and GDX usually works out pretty well. I would note for our gold friends that this is getting pretty darn high in this wedge here. This is way up there, and they may simply point to that as proof that it's going to just accelerate even further and escape that and zoom higher. Could very well be. God knows the dollar is not in any sort of firm pattern now. If we look at the dollar, yes, it had a nice day today, but this is not a basing pattern. It's just that lower lows and lower highs all over the place. So I was pleased to see that, and I like that. I'd love the dollar to soar, but that could be a one-hit wonder right there, a one-day rally. Silver is just every bear's nightmare. Who knows when this blow-off top will end? The Hunt brothers, which 4 years ago no one really even remembered them, but now it's all people talk about. The Hunt brothers top is something that's very much on people's mind, around $50 an ounce. If you're at all objective, I think you recognize that this is kind of the Yahoo of early 2000. This is just a mania gone wild, and if God came down and said it's going to 200, I've got no reason to argue with the man. None at all. So this is just a wild market. On the other hand, some other darlings like Apple are looking, to say long in the tooth is to put it kindly. I mean, this is sickly chart right here. It has broken this trend line, a month ago, and it did a nice retracement, fell from there. Pretty nice triangle pattern here. Kind of rallied up today away from that failure, but I think this stock is uber at risk. I think it's going to get Googled actually this week. Similar to the tumble we saw here. If Apple does anything but walk on water when it reports on Wednesday, God help all of you. It's going to be interesting to watch. Now, the one item I said today that I liked on the long side was, of all things, the U.S. Treasury bond. And if we look at a 128-day hour chart of this, interesting basing pattern shaping up here. I've got this line drawn at 93.67, and I managed, it fell hard earlier today, and I bought it down here and sold it, and then bought a smaller position a little later in the day. So I think this was my best cash money maker today. I'm pretty sure this one intraday trade was my best cash maker. But I am long this right now. Nothing gargantuan, but pretty good size. And I think that obviously if we break above this line, some very, very, very interesting things could happen with that one. And then one other ETF that I did mention today is the good people in the finance industry. This is XLF. This shows this trend line very clearly broken. The trend line having been in place since the Jackson asshole meeting that Bernanke had last year. So I've only got a minute left here. I will simply get on my soapbox for a moment and say that here in the Silicon Valley, the bubble is absolutely stark raving mad. And I think if you look around at Zynga, Groupon, Twitter, Facebook, certainly Facebook, that the valuations, the mania about entrepreneurship, the mania about everybody getting rich by starting their own little company, social media, this makes 2000 look sensible. So I think Facebook's terrific, but $100 billion, no. Anyway, popcorn, Coke, get them out, keep them out. Should be a really interesting couple of years. Some soft spots along the way, but today was fun. We'll take it a day at a time. I'm going to go do some laundry. Bye.